I now hand the conference over to Mr. Ankit Gaur from Systematics Institutional Equities. Thank you, and over to you, sir.
Thank you, Rutuja. On behalf of Systematics, I welcome all on the Q2FY21 earnings call of Welspun India. From the management side, we are joined by Mr. Rajesh Mannaviwala, Managing Director, Ms. Deepali Goyanka, CEO and Joint Managing Director, Mr. Sanjeev Sancheti, President, Finance and CFO, and Mr. Akhil Jindal, Group CFO and Head Strategy. Now, I would like to hand over call to the management, after which we can start Q&A session. Over to you, Deepali, for opening remarks. Thank you very much.
Thank you, Ankit. A very warm welcome to all of you to Welspun India's Q2 H1 FY21 investor call. I hope that you and your family are keeping well and safe. I'll cover the key business updates for the quarter, and later Sanjeev will take you through the financial highlights. After the steep decline in Q1, global economic activity appears to have rebounded sequentially in quarter gone by, owing to lockdown relaxation and policy support from governments across all major global economies. However, we need to keep a close watch on the tenability of the revival process till this pandemic is brought under complete control. Consumer behaviors are settling into new normal as people globally are learning to live with COVID-19. Hygiene and wellness has become an integral part of existence. Consumers are spending more on essentials and hygiene products and cutting back on discretionary categories. They are still reluctant to resume their normal out-of-home activities and are spending more time at home. This change in underlying behavior and rise of homebody economy has resulted in reallocation of spending, which is driving the overall demand for our home textile products. For big box retailers and departmental store chains, the growth of home goods has outpaced that of other categories. Big box retailers continue to be a destination for all kinds of shoppers for various consumer goods. As a sale, are skewed towards such retailers. Since June, we have witnessed buoyancy in demand for our home textile products. Consumer shopping online has increased significantly and is here to stay. With the growth of omni-channel, retailers have also adapted to the next normal in consumer experience and engagement. During Q2, we have witnessed a sharp jump in volumes, and as we speak today, our plants are running at full capacity. The projections for the rest of the year also looks robust. With the customer demand continuing to be buoyant, the company is exploring further ways and means to enhance its capacity by debottlenecking its manufacturing processes and rebalancing the facilities. This has a potential to increase present plant capacities by around 20%. Our new Welspun flooring facility at Telangana is fully integrated with advanced capabilities and infrastructure. It can complement the strengths of our existing rugs and carpets manufacturing unit at Vapi. The synergies will help us to further develop innovative solutions and enhance customer serviceability. We have developed to utilize the flooring division to produce rugs and carpets for our home textile customers, as a rugs and carpets facility at Vapi is running at full capacity. This will not only help in meeting the increased demand for export of rugs and carpets, but will also increase utilization of soft flooring plant at Hyderabad. This quarter, we also launched industry-first virtual 3D showroom and omni-channel experience at New York September Market Week, which was very well received by our customers. As COVID has restricted travel by using innovative digital technology, we are virtually engaging with our customers to showcase our latest innovations, product assortments, conduct virtual inspection, and factory visits. While our home and innovation portfolio grows from strength to strength, we continue to build and strengthen our global licensed and owned product brand portfolio to cater to changing consumer preferences across geographies. US consumer reach is getting stronger with brands like Martha and Scott in our portfolio. UK Europe getting stronger with the Christie brand, and India consumer reach is getting enhanced with Spaces and Welspun. Addition of brands giving us additional shelf space opens up new channels and creates incremental volumes, both online and offline, hitherto not available to us now. Our Martha Stewart brand licensed products are witnessing strong growth across both online and offline channels. I'm excited to share that we have further strengthened our brand portfolio by expanding our brand licensing partnership with Scott Living. Scott Brothers are well-known designers and twin TV hosts in North America with millions of followers. The Scott Brothers launched the Scott Living collection in 2014, and today the brand is extremely popular with products available in major retail outlets across US and Canada. Through the expanded partnership for home furnishings, Scott Living and Welspun to reach wider consumer base with innovative home textile products. The licensed brand portfolio is expected to cross 20 million in the current financial year. Many consumers plan to continue shopping online, even though brick-and-mortar stores have reopened. Our e-commerce and omni-channel initiatives have seen strong tailwinds, resulting in giving us higher touch points. During the quarter, our global e-commerce business grew by more than 4x year-on-year, while Christie branded e-commerce business grew by more than 2x year-on-year. Our domestic home textile e-commerce business, which includes brands Spaces and Welspun, grew by more than 75% year-on-year and 50% quarter-on-quarter. From predominantly being a B2B textile home products supplier to global retailers, we are also evolving into a strong B2C home textile player with direct consumer to end consumer. Apart from the encouraging growth we see in our own global and domestic brands, we see a huge growth opportunity through our licensed brand and e-commerce businesses, wherein we expect to cross $100 million each over the next 2 to 3 years' time. Coming to our domestic business, Q2 has seen tailwinds and consolidated the consumer confidence in our brands, Spaces and Welspun. With the onset of festive season, we expect an improvement in the demand for our products in the second half of this fiscal. With our innovative festive campaigns, Dono Taraf Khushiyan and Chalo Paltaye, and our festive collection, Rangna, we are getting great engagement with the trade and end consumers. Our B2C business has grown by more than 200% since last quarter, backed by unlocking of the economy, coupled with our initiatives campaigns to bring our products closer to the consumers. With an aim to be Har Ghar Welspun, we increased our nationwide footprint to 3,075 outlets and 52 distributors with brand Welspun, and 2,005 outlets and 25 distributors with brand Spaces. Hospitality has been one of the worst hit sectors during the pandemic. Hotel occupancy in the United States is down by 30% year-on-year and is currently around 50% occupancy. We are hopeful normal demand will return by the next year. However, it is based on COVID recovery without another severe round of lockdown. During the quarter, our hard flooring business received positive responses from US, UK, Europe, and Middle East regions. We are in progress of onboarding B2B distributors across these geographies. The existing capacity is largely tied up, and we are adding downstream equipment to augment hard flooring capacity. We have started receiving and servicing sizable volume orders from US and Middle East regions. Overall, our target geographies are getting positive business traction, and we expect sizable revenues coming from the business vertical going round. In domestic markets, we see flooring demand returning back gradually. Sales have now returned to almost pre-COVID levels, driven mainly by click and lock tiles. Welspun Flooring launched industry-first antiviral range of flooring solutions certified by the Resinova Labs, USA. In flooring solutions, we would be the only brand in the market offering safety and convenience of one-day installation, COVID-safe installation for the consumers. Considering the present scenario, this would continue to be the key consumer consideration. Our relentless focus on channel expansion has yielded promising results with signing of 50 plus new plazas. Our digital strategy of customer acquisition has also done well. Our webinar series, Masters of Design in Conversation with Leading Architects, have received excellent feedback and will strengthen our brand image with a specific community. Demand for wipes has grown substantially in the developed market as there is an increased preference and proclivity for using demands for hygiene by individuals and for personal spaces. We are witnessing heightened demand for our spunlace products, which are running at full capacity. Hence, as planned and updated in the last earning calls, we have begun the capacity enhancement projects for spunlace and wet wipes. We will invest around 300 crores in the above facility over the next 2 years and expect to generate additional potential turnover of rupees 400 crores at optimum capacity utilization. Health and hygiene is a strategic extension of advanced textile businesses, where we are capitalizing on a core strength in nonwoven. We are offering health and wellness solutions with clear focus on ready-to-use products branded under Welspun Health. This will bring more end-to-end solutions to the market as we convert more of our roll goods into finished products through value addition. Disinfectant wipes, disposable bed and bath products are some of the immediate offerings in this direction. On our health and hygiene vertical, Welspun products continue to receive good feedback. All of our products, namely 3-layered disposable masks, FFP2 face masks, and overall are now certified by BIS. Our masks are made to protect and are manufactured in a complete clean room environment. We have received the ISO 13485 QMS certification for a health and hygiene manufacturing facility, which is critical for medical device industry. With ease of export prohibition, we also see demand coming from overseas markets. The pandemic economic recovery will continue to have sustainability at its core. We have already made proactive shifts both in our business strategy and operating model that fulfills the SDG and the ESG principles. With well-defined roadmap and targets, I'm extremely proud of Team Welspun for their resilience, collaboration, and outstanding response to support customers and all stakeholders during current challenging times. We are recognized by Home Textile Today, US, as supplier titan for a swift response to COVID-19 pandemic at the prestigious HTT Trailblazers and Titan Awards. Now, I would like to hand over the call to Sanjeev to provide updates on financial numbers. Thank you.
Thank you, Dipali. Good morning, ladies and gentlemen. Many thanks for joining the Q2FY21 Welspun India Investor Con Call. I will give a brief overview of the financial numbers for the quarter before we open for Q&A. Before I come on the numbers, I would like to review the update on the corporate realignment plan of the clothing business, which we announced during our Q4 investor call. After due deliberation, the Committee of Independent Directors has opined that WFL should continue to be a part of WIL in its formative years. Hence, in line with the recommendation of the committee, the company has decided not to pursue the realignment plan. During the quarter, the company fully recovered from the lockdown impact and the plants worked at full capacities. Revenue grew by more than 8% from 1837 crore to 1993 crores, and EBITDA remained flat at 405 crore versus 403 crores in the same quarter last year. EBITDA margin came down to 20.3% from 22%, while the core business EBITDA was at 21.9%. Growth in total income was largely led by volume. It is also heartening to note that revenue and EBITDA has grown significantly over the previous quarter by 64% and 70% respectively. In home product portfolio, bath linen volume grew by 13% YOY and 51% Q-on-Q, while bed linen volume grew by 13% YOY and 145% Q-on-Q. I'm happy to share that we have achieved highest ever bedsheet volume in this quarter. Q2 FY21 home textile revenue stood at 1924 crores versus 1812 crores during the same period last year, EBITDA margin stood at 21.9% versus 23.1% in the previous quarter of the same year. Average exchange realization for this quarter was rupees 73.81 as against rupees 75.49 in the corresponding quarter last year, which impacted our margins. During the quarter, the company entered into promotional programs which impacted revenue and margin of core business by 1.8%. Benefit of these programs will accrue in the coming quarters, and this will help the company augment margins in the rest of the year. Even while the impact of pandemic is fully settled, we have been able to generate revenue and EBITDA similar to what we had achieved during the same period last year. Profit after tax stood at 180 crores versus 199 crores in Q2 FY20. TTM EPS stood at 3.86 versus 3.15 in the same period last year. While revenue from flooring business increased to rupees 77 crores during Q2 FY21 from 13 crores in Q2 FY20, EBITDA loss stood at 30 crores during the quarter. Revenue for the previous quarter was rupees 25 crores, while EBITDA loss was 27 crores. We have started dispatches this quarter for orders of hard flooring from US. While we had invested into the project with domestic focus, looking at the present scenario, export business is looking promising, and we expect large part of the business in the near future to come from exports. Emerging business, which includes flooring, retail, and advanced textiles, contributed 10% to the top line during Q2 FY21. Net debt of the company stood at 2380 crores, a reduction of rupees 582 crores over March 2020. In fact, net debt of the core business has reduced by rupees 1041 crores since March 2019. We have been able to continuously reduce our net debt even though we have added capacity in various businesses, which will yield significant cash flows in future. We continue to allocate capital judiciously in order to enhance shareholder value, and our strategy on capital allocation is to calibrate our capex based on cash flow available and keep it around the total depreciation charge, to maintain a steady dividend distribution of at least 25% of standalone profit, to continue to invest in our brands across geographies and channels. Till date, we have spent rupees 190 crores in capex. Capex for the full year is expected to be around 500 to 600 crores, which will be calibrated based on cash flows. In spite of capex for growth business, net debt is expected to remain around 2,400 crores as on March 21. China has hitherto been the major supplier for flooring products into US, and customers are looking at de-risking dependence on the Chinese vendors. This should increase demand for flooring products from countries like India. Welspun being one of the only players in its segment, it stands to gain from this development. Large global businesses are recalibrating their supply chain strategy, and this may bring in great opportunities for companies like ours who have deep relationships with some of the largest retailers in the world. Being an integrated textile house with excellent supply chain logistics and strong brand image, we stand to gain significantly from this. While we were aided by higher volume and lower raw material prices in the current quarters, raw material prices have since hardened and rupee has come stronger. However, with our drive towards cost optimization, use of technology and improved efficiency, aided further by strong business prospects and robust outlook, we believe we should be able to maintain overall EBITDA margins between 19 to 21% and overall top line of around 7,000 crores. Let us assure you that we are well equipped and ready to take advantage of the improved business prospects as we continue to focus on long-term goal of sustainable growth and delivering our balance sheet. With this, I will leave the floor open for Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nihal Jha from Edelweiss. Please go ahead.
Thank you so much, and congratulations to the management for the good performance. Sir, I had 3 questions from my side. The first one was obviously on the industry and the current demand in home textiles. As you mentioned, obviously because of the increased time spent in home, it is driving a higher consumption of home-related products, which is, I think, very much visible in the pickup in US retail sales also. I think the critical question where even we are trying to check is that is there any sense of any market share shift happening from China, or is the current buoyancy purely driven by the increased domestic demand and potentially restocking? So first, just your thoughts on that specifically.
Yeah. So hi, good morning.
Good morning.
The fact is, yes, you're absolutely right. The consumer behaviors have changed, and definitely the majority is coming in for the kind of consumer behavior shift that is focusing on essentials and not on the discretionary spend. That is something we see definitely happening. China is something that all the global retailers are looking at an opportunity to have a kind of a backup country and a plan B in the product mix. So that is not just because of the China backing, but I think that is something that we see as a kind of a opportunity there, but not in a very. But I think in principally, I will just sum it that people have started staying at home more, and the home textile buying is a prime focus because the home body economy has resulted in the reallocation of spending and driving the overall demand of our home textile products.
Sure, but in home textiles, anyways, we are the largest exporter to the US. So there's a possibility maybe some other country may become a backup. And over the last 3-4 years, the share has stayed stagnant, while some of the other export categories speak of it, and it's reflecting in the data also. Just specifically for cotton home textiles, I wanted a sense that the increased demand is just restocking and higher consumption from US, or you actually expect that going forward there could be actually some of the market share shift from China, specifically in our bed and bath category?
So I will just say that cotton is our kind of a forte as a country, and definitely that would be an advantage for India. In China could be an opportunity, but I will just put it as China +1 as India as something going forward. But going forward, India will definitely gain into cotton category because that's a forte for us here.
Sure. The second question was on the margin side. Is it that, say, the 500 bips reduction that has happened on the gross margin side from last quarter is purely explained by currency, or is there a component of mix also in that? Just a sense in that.
Dipali, Sanjeev, you can go on this.
Yeah.
Okay. So I think part of it is obviously currency, as I explained in my opening remark. A part of it also the mix. I mean, what happens is in the second quarter, there are certain significant programs which are run for some large retailers, the benefit of which actually accrues largely over the second half of the year. So what will happen is some of these promotions will not continue over the next 2 quarters, and it will then augment the margins in the next 2 quarters. So really speaking, this is a 1 quarter phenomenon, which has, and I've already said that it is almost about 1.8% impact because of that as well. And then obviously this quarter we had some COVID-related expenses, and we have also restored salaries of employees with retrospective effect. So these also have impacted the margins, which are not something which would be expected to continue over the next 2 quarters.
Sure. And last question on my side. We're seeing an increase in a lot of brand licensing that we are acquiring. I just wanted to thought that on that specifically, is there a change in thought and is it that that's expected to drive our domestic capacity also? What is the thought in terms of taking up these brand licenses? And on an average, how much are we spending on acquiring each of these licenses? Just to think that.
Dipali?
Yeah. So I think I'll just put forward in a multi-pronged way this question. So I think when I take United States of America, for us at Welspun, as you know, we have been a B2B player, and we do majorly replenishment programs. With the help of Martha Stewart and with Scott Living, this opens up more shelf space with the existing retailers, as well as online retailers as well, and also different channels like grocery channels as well. So that is a very big opportunity that we see going forward. And as we say, and we all know that in these current times, digitization has accelerated 35%. More and more buying will happen online. So brands play a very important role there. For us, I think I would just say for both our brands, we are absolutely on goal and target with our numbers and margins, and with the focus of growing our share on the shelf space and online presence will be completely strengthened here. When I talk about Christie, which is our brand, which we are looking at growing completely digitally, we have a very strong presence in UK, and as you saw, we've had a strong growth. We are looking at growing that across the world, and we have recently got listed on one of the mega online DIY, even in the United States of America. Coming to India, India will be a play where Spaces and Welspun will have a very big, presence. Our goal to get into every household and every shop. So one is the shop and shops that we have organized play, but the MBOs with the vision of Har Ghar Welspun is going to be very, very important. The e-commerce play in India is not going to be a pure play in India. It's going to be a mixed play. So along with being present at the e-marketplaces, we'll also be looking at a play of omni-channel in this country, because we see a growth happening majorly also in the tier 2 and the tier 3 towns. That is something that you see as we going forward as well. So in short, principally, our focus towards brands is going to be very, very important. And as we spoke, e-commerce will also be a very important play. So I could actually put it forward that in the next coming years, brands could contribute 100 million onto that portfolio, and $100 million of e-commerce play will be also very, very strong.
Sure, that's helpful. I'll come back in this. Thank you.
Thank you. The next question is from the line of Tarang Agarwal from Old Bridge Capital Private Limited. Please go ahead.
Hello, good morning. Just wanted to check what is your terry towel and bedsheet capacity, and what have your volumes been for H1 FY21, and how do you see these volumes for H2 panning out?
Sanjeev? So let me come in here. Our capacity for towels is about 90,000 tons on an annual basis. And as Dipali mentioned, that we are looking now to debottleneck it and grow it by about 20%. So the plans are being currently worked upon, and we are looking to debottleneck it. Likewise, on the bed linen side, we are our current capacity is about 90 million meters on annual basis, and that also we are looking to debottleneck it and grow it to about 110. So look, we are looking to grow it by about 20% on both sides of the business. Also on the rug side, we are about 10 million square meters in capacity, and which we are with the synergy with the Telangana flooring plant. We are now looking to double that to about 20 million. So this we already have most of the capabilities already built in our flooring plant. So and with a little bit of balancing and shuffling some equipment between the two plants, we will double our capacity for the next year. So this is how our capacities are looking. Right now, the home textile business is full throttle. So we are virtually this working full throttle. And Nihal also raised a point in terms of, are we seeing this demand to restock? So the answer is no. Today, the retailer shelves in America are going empty. So it's not about restocking. It's just that the consumers are actually buying more. So Tarang, I hope that answers your question.
Volumes for H1, and how do you see the volumes for H2?
So we will. I gave you the capacities that we are working at full throttle, and and this quarter between towels and bed sheets, we are double-digit growth on volume. So about between 13 and 15% on both the products, and the rugs is slightly better than that. So we'll continue that run rate, and so we hope to utilize on home textile side all our capacities fully for the balance part of the year.
Please go ahead.
I will just step in for a minute to RM's answer as well. Is also our brands will also play a very important part in the contribution of volumes. And we also look at doing global outsourcing for a brand specifically, because certain products are not what we make. So that will also add on some contribution to what we do.
Okay, but you all don't disclose specific numbers, is it, for your volumes?
No, we have not been doing that. And so what we have alluded this time is the year-on-year growth on both the products. And so it's 13% on the bed side, on the bath side, and 15% on the bed side.
Okay. Can you give us some broad split of your net capital employed of 6,800 crores between textiles, flooring, and advanced textiles?
Yeah. So on the capital employed, and just get to those numbers. So from a capital employed point of view, in the overall capital employed for the flooring business is about 1,100 crores, and the balance is for the core business.
Okay. And within advanced textiles, is there any manufacturing that you all do? Is there some proportion which is specifically allocated to that business?
Yes, of course. So this everything that we do is manufactured in house, and so this we have, and the products that we are currently doing are for the hygiene industry. So we make raw materials that go into products like wipes and disinfectant wipes and baby wipes and diapers and so on and so forth. We are also converting part of those raw materials into wipes. So it's pretty much everything manufactured in house. And to complete the capital employed answer, so this the advanced textile business is currently we have deployed about 350 odd crores of capital for that business.
Sure. And ma'am, in your in your opening comments, you mentioned that your flooring capacities are being largely tied up. Yet, if I look at your H1 FY21 revenues, they're in the ballpark of 100 crores. So I wasn't quite sure of what you meant there.
Let me take that.
Yeah.
So Tarang, we are embarking on a plan now to do that, and this will involve shifting of some equipment from one plant to the other, and also balancing some of the output. The impact of that will be seen in the next year. It will take us until February, March to accomplish this, and some new equipment will also balancing new equipment, which will not be expensive, will need to be bought. We are working on that. So the whole impact of that will actually be felt from April, and the financial impact will be seen in the next year.
Thank you. The next question is from the line of Bhavin Chheda from Enam Holdings. Please go ahead.
Congrats on excellent performance to the entire management team. A couple of questions again on the capacity. What you announced, the debottlenecking which would happen what would be the amount spent on that, and when would that debottleneck capacity would be ready?
Bhavin, we are working on it, and it will take us a few weeks to work that out. But so this everything is brownfield, so it is about debottlenecking. So this allow us a few more weeks to zero in on the numbers, and this what availability time will be, let's say, sometime in the second quarter of the next year. Part by part, it will start coming, but this by and large, let's say this, this most of it between the second and third quarter of next year.
Okay. Again, the second question is the positive surprise. Your results also and all your competitors, all home textile companies from India doing very well. And almost 3-4 companies have declared result, and almost all are operating at 100% utilization. So basically, just wanted to understand on the demand perspective. Obviously, because of the health and the hygiene region, the demand is good, and there would be some impact of pent-up demand. But what is your call on a 6 to 12 months perspective? How much demand would actually sustain? How many small shops have actually closed down, and big box retailers have gained market share permanently? So just a call on a long-term demand. If you're getting something from the clients, you can share with us.
Dipali?
Yeah. So right now you're absolutely right. We see this as a kind of a peak happening. But I must say that, health and wellness and hygiene are here to stay. And home plays a very important role. Lot of companies and big corporates and global giants have already asked their, people to work from home till June 21. That is something that we are definitely seeing. But having said that, today the shelves of the retailers are practically empty. So that's what we are gunning to fill. But, it is going to be a change of behavior that a lot of studies have already spoken about. So maybe it not be to that extent, but definitely we will see a kind of an upside of at least, overall, 15 to 20% kind of an upside. Definitely in the demand for home goods.
That is good to hear. Thanks. And just a continuation of that question, since I think that data is not yet available. So last 3 months or last 2 months, we have seen almost like 100% utilization and big demand. So is it that the industry demand has gone up and there is some portion of India taking away market share from China? Are the Chinese and the other countries' home textile growing by a similar amount?
It is just an opportunity. It is an Indian opportunity, and I think India being at where I think it is long overdue for us. Cotton being our forte now, one of the biggest producers of cotton textiles, vertically integrated plants in this country. Definitely, it is an India advantage. China is there, but I think India is coming into prime more and more. I would just say that.
Okay. And the last one, what was the growth of advanced textiles in the current quarter and first half?
So, Bhavin, we are already maxed out, by and large, maxed out on the core part of the home textile business. On the advanced textile business. So the spunless line is actually working full throttle, and the wet wipe we are at about 60%. We've added some capacity there. So there our utilization levels are about 60%, which hopefully by the end of the year we will fully utilize. On the needle punch side, there's some area to grow. Year on year, because of the first month that we lost, we are just about flat. But the back half of the year, we should see double-digit growth in the advanced textile business, and with the addition of the new line, which Sanjeev mentioned with a 300 crore capex, so that should more than double our revenues over the next couple of years.
Yeah. Thanks a lot, and best of luck. You're really seeing buoyant times for home textile companies. Yeah, bye.
Thank you. The next question is from the line of Prerna Jhunjhunwala from B&K Securities. Please go ahead.
Thank you. Congratulations on excellent set of numbers, sir. The demand is seeing a very good movement as told by you, and visible in other companies' results as well. So, being a leader, gaining, excellent performance. So, I wanted to understand the flooring part of the business. Could you help us understand what kind of revenues we can see in FY21, 22, 23 based on the conversation with the clients and the kind of tie-ups we're seeing? Wanted to understand the traction that can be seen in that business going forward. So there is an improvement on the conversations with clients.
Good question, Pranjal. So yes, we are seeing a lot of international traction to the flooring business, and this primarily on the hard flooring side. And see, what happens is the hard floor this can actually replace the floor in a day's time, and in this COVID period, so it's actually, you don't want people hanging around in your house if you have to change your floor. So there is an uptick on the flooring side, on the international side. Also, by and large, most supplies actually have been coming from China. So there's been very little exports happening from other parts of the world. So that kind of opens up doors for us with this China plus one thinking. So it opens up a lot of doors for us. Our business is growing. The hard flooring part is already looking very good. The current quarter we have done, the flooring business has done a top line of about 75 plus crores. I think this will cross the three-figure mark in the coming quarter, and each quarter will continue to keep improving, and hopefully this there are 10 odd discussions with very large clients that are currently underway, and we'll get a better handle over the next 2-3 years. But to say that we could do 700-800 crores of revenue in FY22 will not be out of order right now with the traction that we are seeing with the business. Also in the domestic market, we are seeing a lot of traction again. So this our value proposition is to change the floor in a day, and which we have been very diligently doing, going into clients' homes. And in COVID times, with people spending more and more time at home, so to get a floor changed in a day is appealing to the consumers, and through digital marketing campaigns, we are trying to reach as many consumers as possible, and so we built a good system of tying up the digital marketing, getting leads from there, putting it into our call centers, tying it up with our sales force. So the digital direct to consumer sales is growing significantly. We think we'll hit a crore a month mark very soon in the next 2-3 months. So all in all, we are seeing good traction on the domestic side as well, on the residential side of the business. But very candidly, the hospitality business is struggling, which is our soft flooring business, and also the commercial part of the business, the floors which go into offices. So the activity is a little bit slow there. We believe it will take another quarter or two for us to get there. But this a good estimate for the coming year, FY23 would be 700 crores, 800 crores of revenue. But we'll get a better handle of it as we get on the next 2 months. But all in all, our confidence is pretty good.
Okay. So what will be the China's export size to US in the categories for flooring business that you are targeting?
It's about $3 billion, by and large in the range of $3 billion. So and the corresponding exports out of India is not even 10% of that. So there's a very wide room scope for us to grow there.
Okay. So do we compete with the tile segment in this, or is it an independent category that people look at in the US or globally for these categories?
So it's a fairly established. Each of the products that we do is a fairly established category. So it's not between tile or this. So there's a separate market for carpet tiles, there's a separate market for wall to wall, there's a separate market for the hard flooring side. So it's a pretty matured market. In India, the market is maturing, but internationally, it's a pretty figured out matured market.
Oh, okay. So, thank you for this flooring clarity. Wanted to understand the brand and license part of the foray also. Since you are focusing more on brand and licenses, could you please help us understand whether it is largely for revenue build-up or the profitability in these segments are also better and will give better return ratios? How are we looking at this B2C component of our company as a whole?
Yeah.
Dipali, you want to take that?
Yeah, I will take that. Thank you. So, yeah, hi, Prerna. So, with the brand and licenses, as you know, the licenses, as I said earlier in the call, that they give us additional shelf space at the retailers. It also gives us it opens new channels for us. And definitely being a brand, you have a better margin play as well. So, having said that, we also have our own brand portfolio, like Christie, where we're going completely digitally aggressive. And of course, India will also play a very big role with Spaces and Welspun that we see as India a very big opportunity. So I hope I've answered your question, but if there's anything, just let me know.
Ma'am, just wanted to understand, suppose if we get a 10% incremental contribution from brands and licenses business, will it translate into maybe 50 or 100 bits improvement in our margins? It's something that I'm trying to understand. How do we look at this business from profitability point of view then, if it gives us better margins?
It definitely will give us a better margin, Prerna. I will just say that. And definitely also a growth of our business, because you know that primarily we do replenishment programs. It gives us an opportunity to grow here. Definitely gives us a margin upside as well, and also an opportunity to grow in online, offline, all the channels as well. Definitely there will be an impact. But having said that, our private label and our that core business is around 60%, 70%. So the brand play is smaller in that bit. So the dent will not be that big compared to, but yes, definitely it's going to add on a lot of diversity on our shelf space.
Okay. And my last question is on debt. We were planning to become debt free by FY22-23. Is that still possible, or there could be a delay in that?
Sanjeev?
Yeah. So, as we have, in our guidance said that, in this end of this year, in spite of the capacity expansion we are doing and the capex plan, we will be at 2,400. So for the core business, the debt is already significantly down. So I would rather say that in core business, the debt should continue to go down while we are investing in a couple of growth businesses like flooring and advanced textile. So I think 22-23 guidance is little difficult to give now, because we're also calibrating on how we can expand our capacity through brownfield, debottlenecking, etc. So I think this more accurate guidance, probably a better sense would come in towards the end of the financial year. However, the endeavor is to continue to calibrate our capex in a very conservative manner and look at investments, if at all, on which can give us a very quick payback.
Okay, so that's helpful. Thank you so much.
Thank you. The next question is from the line of Manish Bhandari from Vallum Capital. Please go ahead.
Hi, thank you for the opportunity. I have two questions. One is, I wanted to know at what revenue level which we should see a positive EBITDA in the flooring.
So we should be EBITDA positive around the 1,000 crore, 800 to 1,000 crore mark. And there's work that we need to do to let's say just get operating efficiencies out of the business. So on a 800 to 1,000 crore this operating level, we should hit EBITDA break-even. So we are looking, in fact, the entire team is working towards EBITDA break-even for FY22, and we are on course with that, and there's work to be done, of course, but everybody is working towards that goal.
Thank you. My second question is, during the conversation on the conference call, there was a comment made on the change in the rupee movement, which has led to some impact on the margin. So I wanted to know the forex hedging policy of our company in the process.
So we have a policy to hedge about 60% of our top line to be covered, to be hedged. That's a stated policy, and that is what we follow. So we tend to be between 55 to 60%, and the rest we keep it open. That's the stated policy.
But if you keep a 60% hedge, and if you would have hedged a year back or maybe 6 months back, I am still finding it hard to believe that how there can be a loss on the forex side. If you could spend a minute on that.
Yeah. So what has happened is, so there are 2 or 3 things which impacts our forex revenue. One is that we don't cover the full amount. A part of it is covered. So some of the hedges which we did, we do 12 months rolling hedging. So what happens is, what we had hedged in last year, had the impact of it comes in the current year. So that is a dynamic situation. So the actual net impact of forex was almost about 75 rupees for the last year, same quarter, and this year it was 73.8. Going forward, what we have hedged will give us headroom, because 60% is already hedged at good prices. So that will give us headroom over the next 4 quarters. At every point in time, we always cover the next 12 months. We keep rolling 12 months, 60% covered, 55 to 60% covered.
How much, Mahesh, we have been fairly consistent. Sorry, we have been fairly consistent with this over the last 5 years. So there is no trading here. So this week on week, it is religiously followed, and week on week, this our estimated 60% sales is hedged. So there's a fair bit of discipline that we follow with this policy.
Sure. And you mentioned about a 500 crore capex in this calendar year. I mean, in this financial year, FY21. Am I right on this number?
Yes, you're right.
And
out of it, close to 200 we have already spent.
Sure.
In the first half.
And where this number is, what is the distribution of 500 here?
So this is largely into the flooring and advanced textile capex, which we already announced last quarter.
Sure. So what is your estimate of how much would be the increase or decrease in the cotton prices, raw material prices for you in FY021 versus FY020?
Dipali?
So we definitely are seeing cotton prices go up, and the MSP also up by 3 to 5%. Pakistan has also reported around 40% decline in the cotton produced. So we definitely see that kind of forming in the coming months. But looking at the overall scenario and the cotton yet to come in, we expect the cotton prices to stabilize at around 38,000 a candy compared to 40,000 last year.
Your net purchase is a relatively lower value, I mean to say. Realizing it should be, the cost should be lower than the last year, am I right?
Yeah, the cost will be lower than the last year, definitely.
On an average basis.
On an average.
Yeah. Sure. I have last question and observation. This is regarding the rearrangement of the business, which was spoken on various levels. So I wanted to read the mind that what kind of rearrangement we are looking at. Are we looking at demerging this company, and was that the deliberation in the board? And if so, then my observation will be that the shareholder has bear the pain of going through a losses of this flooring business. So I would be glad as a shareholder to remain in this the flooring business to remain in this company. So I just wanted to read your mind and that what kind of rearrangement you have spoken about or you've discussed about.
So we had earlier, if you remember, that we had we had calibrated that we may look at demerging or any other way of looking at the flooring business. We had this, we had a lot of discussion with the board and a lot of other experts. I think the view which has come out is that at this formative year, when we've already borne the initial period of the flooring business, and as the business is expected to improve, it will not be prudent to demerge this business, and it should continue to be a part of WIL. So the decision has been that we continue and maintain status quo.
Does it mean for next 1 or 2 years or permanently it will be status quo, or is there any final print which is for us to hear from you?
So see, this is this company is in formative years. So I think this whole question of whether we need to demerge it or do something else is something which we have decided that we are not going to do at this point in time. After 2 years, what can happen is something which is very difficult for us to kind of predict now. But as of now, definitely we are not looking at demerger or any other corporate restructuring as far as the flooring business is concerned, and it will continue to remain a part of WIL.
Thank you. Thank you all for your insights. Thank you.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question for today. I now hand the conference over to Mr. Ankit Gore for closing comments.
Thank you, guys. Thank you, guys at Welspun India team. I would like to hand over a call to the management for closing remarks. Thank you.
So thank you everyone for your participation, and I think keep safe and well. Thank you.
And thanks a lot, everybody. Thanks for coming to the point. For Dennis call, if you have any more questions, please reach out to Vipul or me. I want to also extend my season's greeting to you and to your family. Stay safe, stay happy.
Thank you all. Thank you very much.
Thank you. On behalf of Systematics Institutional Equities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.